Well, I'll kick it off in a couple of minutes. Just see if anybody else comes in, because I had a bit of trouble signing in. Sorry, so I'll just give it another minute or two if that's okay. But interesting budget last night. We usually get a budget update every year. This one's obviously, there was one in, I think it was April, and then another one now. But wasn't too much excitement in it. But I just wanted to recap a couple of things that are happening in the future more than anything. Plus, obviously, what's happened in the budget just recently as well. And then we can, sort of recap from there. So, Brent, are you there at all? Can you hear me, mate? Hello?
Sorry, is that better?
Yeah, I can hear you, mate. All good.
The wrong microphone allocated, sorry.
No dramas at all. Very good. What were your initial thoughts on the budget when you obviously had a bit of a chat before we came here, but what were your initial thoughts, mate?
Yeah, no, not a great deal. It was really a reaffirmation budget. It just reaffirmed a whole heap of things that had been previously flagged by the previous government. The current government's probably got their hands tied a little bit with how much they can spend and things like that with the current inflation. So
yeah, obviously the inflation figures that came out today were pretty high, weren't they? Really, so like 7.3% for inflation was quite large. I thought. I think that might be the highest one so far. So that's obviously going to play a part in what they're going to do and things like that. But you're right. Essentially, it was a bit of a reaffirmation budget of what was already included, but they also canned a few things as well. So I wouldn't mind going through those also, just to say, yep, these are the things that they haven't really liked too much, and then they're the ones that they're going to sort of dip out from there also. So very good. I'll just wait another minute or two.
my video won't come on, Pete. It might be a restriction on this Zoom webinar module.
That's okay, mate. Yep.
There you go.
Ours won't either. So I think somebody said it that you can't see us. So that'll be on his side, not ours.
Oh, okay. Yeah.
My head's good for radio anyway, so I'll let Pete take it.
Yeah. So mine too, but it's all good. All right, so we might kick it off. Brent, just confirm that you can only see me, is that right?
Correct.
Yep, okay, cool. Excellent. So yeah, welcome to the 2022 budget number 2 recap. Who would have thought that would have happened when we started at the start of January this year? But obviously the Labor government has come in and they've produced their own budget after the coalition government got overturned back in May. There's been a couple of small changes and there's been a couple of reiterations, but as Brent said before, the most part of it has been sort of a reaffirmation of what had initially been legislated before by the previous Morrison government. And there's been some major projects in the region which have been affected by not only this budget, but a few other things that happened. So we'll recap on that as well. Obviously, the last couple of days there's been a few major things that have happened. That's going to affect most of Central Queensland, I think, from there. But initially, the first thing is that they, the new government, essentially legislated that the annual reporting requirement for self-managed super funds was initially flagged to be out to 3 years. So the previous government had said we're going to work towards having our SMSFs or self-managed super funds being audited every 3 years. The current government has essentially quashed that in their head and said every year there's going to be a requirement for a self-managed super fund audit. So that's quite a big implication for a lot of our clients that are in business. So from our point of view at Canars, we have quite a number of self-managed super funds in regards to business people who own their business real property or other properties, etc. So essentially what that means is it's a status quo as it is now, in that every year you'll be required to have a self-managed super fund audit like we do at the moment. So a current set of accounts for your self-managed super fund audit, self-managed super fund process, plus also the audit on top of that. So that has essentially been quashed by the current government, where we could have an audit every 3 years. And we're just going to stay as it is now, in that every year you have to get an audit on your self-managed superannuation fund. The next part of that is that they're going to limit the cash payments to $10,000 for businesses. So anything over $10,000 wouldn't essentially be required to be in cash. You would have to have it via a bank transfer or the like, or a credit card payment. They've squashed that in the head as well. So the $10,000 limit on cash payments has been essentially removed. So cash payments can happen to an amount to be determined from there. So right or wrong, I'm not here to judge, but the government previous had essentially wanted that cash payments above 10,000 would be illegal. That's not going to happen anymore either from there. So the couple of initiatives that the previous government had proposed in relation to data sharing and essentially residency requirements and things like that, the current government has said no, we'll go without that from the time being. So nothing too major from a small business point of view or our client's point of view, but just little minor tweaks here and there on the back end as well. Digital currency. So the current government has essentially reaffirmed the previous government's position, where they are going to track Bitcoin and all the other sort of digital currencies, and have some data sharing between those wallets and cryptocurrencies to make sure that everybody is paying their fair share of tax on the digital currency that is either gained or lost from there. So that's quite an important measure. Previous governments haven't really said too much about the digital currency or cryptocurrency, but they are essentially making sure that the data sharing keeps occurring between the cryptocurrency wallets and also the governments. It helps us out as tax agents to no end, to make sure that we can ascertain how clients have sold or purchased cryptocurrency. Just saves dramas down the track with audits and things like that. The next one is a very obscure one, but also a very important one if you've got intangible assets. So previously, if you bought an intangible asset, so an intangible asset is something that you cannot see or touch. For example, a business or a piece of software, or something that you like, a patent. Essentially, that was the word I was trying to grab. With the previous government, they had initially said that you could self-assess the effective life of that intangible asset. The current government has quashed it in the head and said, no, you can't self-assess it. And the status quo occurs where you can't depreciate the effective life of a patent or an intangible asset. I think that's probably a good measure, whereby people were purchasing software which you couldn't really quantify or determine and writing it off as a tax deduction. That's not going to happen anymore from there. The penalty units, if you were to be in trouble with the ATO, has increased from $222 to $275. That's pretty much in line with inflation. So if you're late with a BAS lodgement, or you've done something wrong with the super guarantee forms, or if you're avoiding tax, etc., the penalty will increase from $222 to $275. So in line with inflation, and probably a good measure that's happened for the government from there. The two major things that have changed in the budget with this government compared to the previous government's budget, one is that the downsizer contribution has reduced the age from 60 to 55, where you can put up to $300,000 per person into superannuation if you sell your principal place of residence. There's been quite a fair few downsizer contributions happen, not within our client base, but across the economy, from what I've read. So they're sort of expanding that as well to include more people that want to sell their family home and retire into a smaller house and put that into superannuation. So they've lowered the limit on that. They've also extended the asset test exemption for the sale proceeds from 12 to 24 months for the pension payment, and decreased the deeming rate as well. So there's a bit more information available on that with the information that we sent out in the email this morning. The biggest one that I can see with the budget is the FBT on electric cars, but I'm not quite sure how this applies too much. But previously, if you had a staff member or somebody who was on your payroll that had a $30,000 car, and they had a substantial private use on that motor vehicle, they would have to pay a portion of their post-tax income towards that motor vehicle. With the new budget, from the 1st of July 2022, battery, hydrogen, and plug-in electric cars, if they have a retail price below luxury car threshold, which is about $62,000, it's exempt from FBT. So obviously they're encouraging more people to buy electric or hybrid cars, and the FBT exemption will apply no matter what the value of the car is under the $62,000. So if you were to have a client or an employee that had 100% private use on an electric car, which was worth $50,000, it could be exempt from FBT, giving them a full tax deduction for that car. So it is quite a good measure from the government, and it helps out if you can find a car under $62,000, which is the luxury car tax threshold, and that could be a benefit if you're looking in that sort of realm from there. The next sort of initiative was the boost in the paid parental leave. Now that was quite prevalent in the media beforehand, but they've increased that to 26 weeks from the current threshold as well. But that doesn't happen until the 1st of July 2024. So that's about 18 months away. So that also applies to not just the mother, but also the father. So you're able to claim through Centrelink paid parental leave for 26 weeks. Now, I understand that's up from the previous 18 weeks of paid parental leave, but that's also going to cost the government a fair bit of money from there. The rest of the budget was really about extending the ATO compliance. So, i.e. making sure that the budget was able to collect more tax from people that weren't doing the right thing. So both in the shadow economy, the tax avoidance task force, and the personal income tax compliance program. So previously the tax office had come out and said that they're looking at rental property deductions, as well as also work-related deductions. And from there, they're really looking at people that are overclaiming compared to what their current statistics say is normal for that income bracket. So, for example, if you're a government worker, they would expect that XYZ would be claimed from there. Real estate agent, you would have this sort of amount of claims. School teacher, you would have XYZ of claims. So they're really starting to crack down and data match income occupations to the amount that you claim, and they're really looking to do that a lot more with the personal income tax compliance program that's being implemented. The shadow economy essentially is really about making sure that businesses are following the rules and there's no cash payments, etc., from there. The other big part of the budget was more focused at the big corporate tax level, make sure multinationals are paying their fair share of tax. It's been in the media quite a fair bit, but they are spending some money towards making sure that multinational companies are having the same effective tax rate as what onshore companies are, and their compliance regime is going to really increase based on that. The small business owners will also receive an extra bit of funding based on the Small Business Debt Helpline. So if you're in trouble with a small business, there's going to be a lot more support available via business advice through the government, and making sure that mental well-being and health is at the forefront of small business owners, which I think is very good policy from there as well. Apart from that, as Brent said, it's really much an affirmation budget of the previous budget produced by the coalition government. They've deleted a couple of things. They've added just some little tweaks as far as the paid parental leave scheme, making sure that the small business are looked after via some mental health, and also including the downside of payment to be a bit younger as far as the age is concerned. And they are, obviously, the government at the moment is very much climate conscious. So they're making sure the FBT and the electric vehicles are really decreasing there as well. So apart from that, not much else really to report from a federal budget point of view, but I do have a few more things to add as far as what's on the horizon in central Queensland from there.
Pete, the only thing I would add is with the budget that probably affects some of my clients on the financial planning space is the extension of the income threshold for the Commonwealth Seniors Health Card.
Yep.
So the government estimates that about another 50,000 Australians will be eligible for that card. So basically, this is really for self-funded retirees. The card gives you some concessions, mainly around your pharmaceutical benefits. There's a few other benefits that you get, like an energy supplement. With the COVID packages, they got a few $750 one-off payments and that sort of thing. But most people use it for the medications, and they're being quite generous here, because as a single person, the current limit is $61,000, and that's actually going up to $90,000 of assessable income.
Yeah, well, that's pretty big, isn't it, really? So,
and as a couple, it's going up from $98,000 to $144,000. So it's really going to broaden that net if you are self-funded on being able to get that eligibility for the card. So it's worthwhile having a look at that. You just got to have a look at the income assessment on that. So it's pretty much what your taxable income is, plus adding on a deemed income for your superannuation pension if you're in that phase. So
yeah, and we always try to make sure our clients are aware of that amount, aren't we really, mate? So
well, yeah, with our standard client reviews, it's a checking point, and definitely it'll be running through the list of those that don't have it in our database. Yeah, it'll definitely, a lot of our clients who aren't currently eligible will fall into that now. So
yeah, no, that's really good, isn't it? So couple of other things we want to cover up on, obviously, as part of the budget, and it's only obviously just occurred last night, but there's a fair bit of talk about the Rockhampton Ring Road. I've seen some posts on social media and also through the media that it's been delayed a couple of years to try and make sort of headway for some more money to be able to essentially account for the costs which have increased based on inflation and the like. That's going to have a massive impact on our regional economy, isn't it, Brent? If that does get delayed, obviously people have banked on that as far as property is concerned, businesses and things like that. So that's not a factor from an accounting or a tax point of view, but that will have a massive impact on our economy if that is delayed by a few years.
Yeah, no, I agree. 100% agree there, Pete.
Yeah, so there's a lot to play out, obviously, with that one. We're just gonna wait and see what happens, but it is to be aware of the budget and what's happened in the following day with regards to that. There's a fair bit of talk going around our town, so we'll just have to wait and see how that plays out from there. The other big thing that happened before the budget was concerned, but also what could happen is stage 3 tax cuts, which were essentially flagged by the coalition government a couple of years ago. The current government has said that they will keep that initiative and that legislated tax cut, which will happen in July 2024. Yeah, July 2024, you might think, oh, it's a little way away, but it's not. It's actually 2 tax years away. So we've got this tax year, the next tax year, and then we're into July 2024. So the big thing with that tax cut is a simplification of tax brackets. So currently we've got a few tax brackets in play, but what's going to happen is that the highest tax threshold will increase from 180,000 to 200,000 on the stage 3. And then the income bracket from 45,000 to 200,000 will be taxed at 30%. So there will only be 3 tax brackets under stage 3, which will be 4. So 0 to 18,000 will be 0. 18,000 to 45,000 will be taxed at 18%, like it currently is. 45,000 to 200,000 will be at 30%, and then anything above 200,000 will be 45%. So it's a massive simplification of the tax bracket, which will mean that there's a lot of benefits to our clients who are in that 45 to $200,000 tax bracket range, to be able to increase their wages or do tax planning to make sure that they get the most out of their business and their business profits from there. That's still in play at the moment. Never say never as to how it goes, but we're still looking at that in the coming years, and we're getting a lot of questions from clients as to whether or not how it applies to them and how it helps, but it does help quite a fair bit from that as well. The other thing as well is a reduction in company tax rate, which is on the cards. So currently the company tax rate for small businesses, that's if your turnover is under 50 million, is 25%. That could decrease further to 22.5%. But once again, we're really waiting on the government to see what happens in the coming budgets from there. Also, don't forget that the instant asset write-off. So if you were to purchase an asset, which is an appreciating asset over a number of years, currently that is unlimited for a tax deduction. That is still available up until the 30th of June 2023, provided that you have that asset ready and available for use in your business at that time. There's been very limited talk amongst the governments about that, so it's very important to make sure that if you are looking to purchase any assets in the near future, that you get that done before the 30th of June 2023, or you could risk it being a depreciating asset like it was before COVID. Anything before that could be an instant asset deduction, which means an instant tax deduction on your tax return. Apart from that, that's pretty much everything from the budget as far as we're concerned as accountants and tax agents. Obviously, there's a lot of infrastructure spend and healthcare services and things like that. But as far as tax is concerned, it's very limited, or a limited scope of change, which, good or bad, it definitely makes for a very consistent budget from our point of view, which is quite good, that's for sure. Brent, I know you're online. You got anything to add to that at all, or?
No, mate, that's a very good overall update. As you said, I didn't really see anything too major in the budget. You've covered most of it all very well, thank you. So I don't have anything further to add.
Well, from what I read of it, the biggest thing was the FBT electric vehicles on the luxury car limit. Like, that's quite big in the future if you can buy a car under that limit, obviously. Definitely have a look at that if you're looking at buying a new vehicle or a hybrid vehicle, or your staff are. If you can get it under that luxury car limit and have it FBT exempt, there are some benefits for that. I'm not saying to go and buy a luxury or buy an electric car. I'm neither here or there on those ones, but that is quite good from a tax point of view, isn't it, mate? Really.
Yep, gotcha.
But yeah, everything else is very much same. I haven't really messed with the tax rates or the superannuation rates or anything like the capital gains discounts and things like that. So no, it's as you said, it's more a reaffirmation budget, sort of keep going as it is, and then we'll go from there. Does anyone else have any questions at all, or? No? You want to wrap that up, mate, or?
Yeah, I think we wrap it up. Yep. Thanks very much for everyone attending.
Yep.
It is recorded, so we'll send out a copy of the link to the presentation, just if you want to go back through anything again. I think most of you are subscribed to our emails, so we sent that budget update out this morning in greater detail. But if you do have anything you want more information on or how it may apply to you individually, then feel free to reach out to your Canars contact.
Yep. And then obviously it'll be on the podcast as well, mate, won't it, really? So.
Yeah, we need to get that podcast going again, Pete. So we've had a bit of a break on that, but we might get this up and get it running again.
No, very good. All right. Well, thank you everybody for attending or listening, and have a great week.
Much appreciated, Pete. Thank you very much.
All right.
Brent, and we'll
Mark.
get to connect with you guys soon. Thank you.
All right. Thank you.
Thank you, James. See you later.
Thanks,
All right,
Jason.
thanks,
See ya.
Jason.